I'm about to invest thousands of pounds into my new Trading 212 ISA account. Just before we get into the investing, which I'm super excited about, I did post a video yesterday all about how I had sold out of all of my positions in order to move into Trading 212 and start this new ISA. And I've received quite a few questions about that and some comments, so I just wanted to address some of the most popular ones first. I've seen a lot of people telling me that now is a time to buy and not a time to sell, and I completely agree with this. The market has been absolutely crazy recently, and it is for sure a time of opportunity. I completely agree. However, I instructed my ISA transfer to take place way before everything started happening. So for me, I couldn't have predicted what was going to happen, and it just is what it is really. I'm going to be buying today, and hopefully I can pick up some undervalued stocks and just some good discounts out there. The next most common comment that I've received is all about why I sold all of my positions and I didn't just transfer them. It's literally as straightforward as I didn't have that option. There was no option to do an in-species transfer, which is where you move all of your investments into a new platform. Instead, I could only do a cash transfer, which meant I had to sell all my positions, have my money on my account as cash, and then that cash was going to move over. Another comment that I've been seeing from a few people is that they think I've been changing my mind a lot and changing providers a lot. I've been investing for a few years, and in them few years, I have moved to my third provider. That seems like a lot, but there are logical reasons and explanations behind that. When I first started, I went with Vanguard. Vanguard was an absolutely excellent choice for a beginner investor. It gave me what I needed at that time. However, I quickly figured that they didn't offer individual stocks or anything other than their own funds. And I was getting so interested in investing, I wanted more than what they could offer. Because of that, I started looking for a new provider. I originally saw Trading 212 and I wanted to go with them. However, they were not accepting new accounts. So that was completely out of the question. I could not go with them. So I looked around, I did my research. Interactive Brokers had a new ISA that they've not had before. It looked good, I went with them. At that time, they were offering me everything I needed, and they were really good. However, the fee structure and the fees associated with that account got too much. It didn't make sense to carry on when fees are such an important part of the overall return that an investor sees. Now I've got to the point where I want to be regularly investing and investing more frequently. I needed somewhere that was going to be a little bit cheaper. So just in time, Trading 212 started taking on new accounts. So that was really, really good timing, and it made sense to go over there. And hopefully that will be it. Now I won't have to change again. Obviously, I don't know what's going to change in the future. I don't know if Trading 212 are going to start introducing crazy fees or anything like that. I hope not, but we just don't know. All I can do is make the best decision for me at this time. And then this comment of me changing my mind in terms of what I actually invest into. I think this is quite silly because of course I'm going to change my mind as time goes on. I am learning and I'm just sharing my portfolio and my views as I'm learning them. And my opinions are going to change over time, and hopefully I can just understand more and make better decisions as time goes on. And at the end of the day, this is my money that I've worked hard for. So I'm going to put it where I think it's best served. And of course, nothing I say on this channel is financial advice. I just hope that you guys are learning with me, that you're getting something from these videos, even if it is just introducing you to a new way of thinking, investment strategies, introducing you to a new stock, whatever it is. It's not financial advice, and you don't have to do what I'm doing in your own portfolio. Right, so now that's all cleared up, let's move on to my epic invest with me. Okay, so here we are on my new Trading 212 account. This is completely from scratch. You can see here it's telling me my portfolio is empty. There is absolutely nothing currently in this portfolio, so we're going to start adding to it today. The account value is £4,877.21, and that is all in cash right now. That's what's been transferred from my Interactive Brokers account. If you didn't catch my last video, I broadly spoke about what I want inside my new ISA account. I said I wanted some ETFs, some UK dividend stocks, some non-UK dividend stocks, and some non-dividend stocks that tend to be more of the growth stocks. We're going to invest in some of those things today. This is not going to be a finished portfolio. There are some companies that I'll get to that I am not adding today for particular reasons, and some companies or some sectors that I want exposure to, but I haven't quite made my mind up as to which individual holdings I want. So I'm going to make that clear as I go through, but just know this is not the final product. I don't really know how to use this if I'm honest, but we're going to just start buying and hope for the best. We're going to look at my UK dividend stocks first. So the first company I know I want in this portfolio is Unilever. This is a company that I had in my previous portfolio, and it's one that I want to carry on having going forward. I actually am using this as a time to reset and actually realign what I want in my portfolio. So that is exactly what I've done. So what you'll see here today is you won't see an identical portfolio to what you saw in my portfolio perhaps the last time you watched an update video. It's not going to be the same. I've realigned a little bit. So let's buy some Unilever. Just looking at trading 212 on the computer for the first time. It's quite cool. It looks like it's going to show me a lot of information. Yep. Here, consumer goods company, all stuff we know about Unilever. CEO, and then some key ratios, which is cool. Even tells me about their dividends, their balance sheet, cash flows. This looks really good at a snapshot. I like this a lot. So I'm going to click buy and I'm going to do a market order. They have the option of limit orders, but I'm just going to do a market order and I'm going to let it go through on Monday. If it's slightly different to the price that I'm looking at today, that's okay. Obviously the market's currently closed. I say obviously, you don't actually know when I'm filming this. It's currently a Saturday. So you can either specify the amount of money you'd like to invest or you can pick the number of shares. I'm going to go with the amount of money because I know that I want £300 worth of Unilever stock. And that's going to get me about 7.3 shares. So let's just review that order now. You'll see that the commission on trading 212 is free, so I'm not paying any commission charges. I am paying a bit of stamp duty reserve tax, which we have to pay on UK stocks. You can see the number of shares I get in and how much that is actually going to be charging me today. So let's purchase my first stock on trading 212. How exciting! Okay, I can see it's popped up behind and said order placed. So there we go, our pending order, £300. Cool, we've now purchased our first stock in the new Trading 212 account. The next UK dividend paying stock that I'm going to be buying is National Grid. Again, you can see some information if you're not really familiar with National Grid, but we're going to skip over that today because these are companies I'm very familiar with and obviously I've already made my decision to purchase them. We're going to have a similar story here. We're going to pick up £300 worth, which is going to get me just under 29 shares. Let's review that order. You're going to see the same thing for these UK stocks. I'm purchasing the same amount because stamp duty reserve tax is a percentage. So it's going to be the same if I'm buying the same amount. So let's send that order off. Spending money has never been so easy. This is a bit scary. I've just spent £600 in like under a minute. We've got more damage to do. However, investing is very good for your future self, so I'm not complaining. The next UK dividend company that I'm going to be picking up, try and guess what it is. It begins with a D. Did you guess it? It's Diageo. Big fan of this company, real economic moat in my opinion. Warren Buffett even once invested into Diageo, the only UK stock he's ever had. So let's buy this, and again, don't mean to bore you guys, but it's going to be £300 worth. 7.5 shares, just over. Review the order. There it is, exactly the same as you saw last time, and we're going to send that off. That's another £300 spent. The next UK dividend stock is one that I actually didn't have in my previous account. I did have a REIT in my old account, but I've decided that I no longer want that REIT, and now I want this REIT, and that is Segro. For those of you wondering, I had Tritax Big Box REIT in my previous account, and I can talk more about why I'm getting rid of that one and instead moving into this stock. If you're interested, let me know. But for the sake of this video not being hours long, I won't go too much in detail. But what you can see here is it's a UK-based real estate investment trust, which is called a REIT. And they're the owner, asset manager and developer of warehousing and industrial property. Interestingly, this company doesn't just have property in the UK, they also have property across Europe. You can see here, Poland, Spain, the Netherlands, Czech Republic. So it's got some geographical diversification there too. We're going to start a smaller position in this company, and I'm going to build it up over time. So today we're only going to purchase £100 worth, which is going to get me 13.35 shares. Like I said, this is happening at a weekend. So what that means is come Monday when the stock market opens, the prices may change slightly when this order actually goes through and executes, which means I may be paying slightly more or slightly less than I anticipated. But it shouldn't be crazy different. I should still be okay. Let's review that. What you can see this time is the stamp duty reserve tax is a lot less. And that's just because, like I said, it's a percentage. So if I'm spending less, it's going to be a less amount. Send that off. That is now officially a position that I've never had before. So that's really exciting. Next up is also a new position. This is a Canadian dividend paying stock. And I've had my eye on this stock and another one very much like it for quite a while now. But I finally decided which one out of the two I want, and that is Canadian Pacific Railway. The other one that I was thinking about is Canadian National, but this company here, Canadian Pacific Railway, has recently undergone a merger, which I think is going to be really, really exciting for them. I just think they have a load of growth potential. They have real economic moat, and I don't see them going anywhere anytime soon. Again, if you're interested in any of these companies that I'm picking up today, and you want me to explain why I've invested in them, or you just want more information, obviously let me know in the comments below. So let's purchase this company. I'm going to pick up £200 worth of this company, which will get me about 3.1 shares. This stock is a Canadian based stock, and because you can't, as far as I believe, you can't trade in dollars or Canadian dollars on here, there is going to be an FX fee involved in this one. So let's review the order and just take a look. So the commission is still free, but you can see here there is a small FX fee and a small FX rate as well. But this isn't a great deal. You can see that the shares value is £199.70 and what I'm paying is £200. So it's really not that expensive on here by the looks of it. Of course, in the UK, if you're buying US and Canadian and other stocks, there may be a withholding tax of 15%, providing you sign the right form, the WBEN 8 form. I think that's what it's called. So make sure you're doing that as well. Let's place this order. Again, welcome a new stock to the portfolio. The next one is actually an ETF that did feature in my last portfolio, and it is VHYL. This is a high dividend yield ETF. So what it does is it's a Vanguard ETF, and it basically selects all the slightly higher than average dividend paying companies, and it puts all of them into an ETF. I really like this ETF because obviously it gives you a good dividend, but also the companies within it I think are really strong, good companies to have. I think around 26% is actually exposed to the financial sector. Typically speaking, the financial sector stocks tend to pay a dividend, hence it works out that way. But also, if you haven't been living under a rock, you will know the hit that the financial sector's had recently. And to me, that doesn't panic me, I see opportunity. So the price has reflected here as well in the ETF, and it's gone down slightly because of all of this craziness and this noise that is happening right now. So I'm excited to pick this one back up. I did have it in my previous one, like I said, but I'm going to carry on investing into this. We obviously want the one on the London Stock Exchange, so let's click into that. And I'm going to start off this position with 500. So that gives me just under 11 shares worth. Again, depending on the price on Monday. So let's review this order. What you'll see here is there's zero commission, zero FX fee, zero stamp duty tax. So I'm getting £500 worth and I am paying £500 for this. So let's send that order. So far, I think we've spent about 1,700. So we've got a little bit more to go here. We're now going to move away from dividend related stocks and ETFs, and we're going to move on to non-dividend stocks and ETFs. I'm very much interested in dividend growth investing, but I've always said on this channel that is not the only thing I'll invest into. I want to see where my money is best spent. If that's a dividend stock, great. If it's not, I don't mind. There are two positions that I'm going to be investing into in a minute that could be a little bit controversial. I don't personally think they're controversial, but people seem to either love them, have strong conviction for these positions, or they really don't think that they should belong in anyone's portfolio. So we're going to get onto them two in a minute. One of them being the largest holding. If you're a regular viewer of this channel, you'll probably know what that one already is. But first up, we're going to get some Amazon. If we look at Amazon right now, again, I'll make a whole video going into why I purchased the stocks that I have if you want it. But you'll see that it's under $100 at the moment. And this, for me, I think is quite an opportunity. I don't think it's going to stay here for very long. And I do think it's going to go back up in the future. I just think it's a bit undervalued right now. So I'm going to be picking up some whilst it's at this price. I'm going to be going for 250 shares of Amazon stock, which equates to about 3 shares. So let's review that and just have a look. Commission again is free. There is a slight FX rate and an FX fee, but all in all, you'll see it's really not that expensive. You can see here the shares value versus the total price. So let's purchase me some Amazon. I've never really had any US big individual stocks, apart from, I guess, Tesla, in my portfolio, because I've always had the VUSA S&P 500 tracker, which has got these companies in. But like I said, I'm building conviction for some companies and I want higher exposure to those companies than what VUSA can give me. But we will get onto VUSA very shortly. So let's send this now. The next one that we're going to purchase, and again, it's because I think it's at a very good price right now, and that is Google. Oh, it comes up anyway. I was going to say, yeah, Google, Alphabet is the parent company. You'll see here that there are actually two share classes that you can pick up. You can get Class A shares or Class C shares. There's not really much difference. One has voting rights, one doesn't. So for me, I don't really mind. I'm going to pick up the cheapest option today, which is Class A shares. Like we've just seen with Amazon, Alphabet is hovering around the $100 mark, and I don't think it's going to sit there for a long period of time. I do think it's going to go back up. Lots of things are happening right now in the whole AI world, Google being very involved in that. So it's exciting times, and I don't think Google's going anywhere anytime soon. Just like with Amazon, I'm picking up 250 shares of this company, which is going to get me about 3 shares worth. Review that order. Similar picture than we've just seen, so we can send that one off right now. Now we're moving on to the slightly more controversial stocks that I'm going to be adding. The first one is Palantir, and I know there are a lot of people that really don't like this company, and that's okay, they don't have to. However, I do want this company in my portfolio, and it is a very confusing company to actually understand, and I would definitely recommend you take time to learn about them, what they're doing, and just decide whether you have conviction for that or not. I actually already have about 6.3 shares of Palantir on my free trade account, but that isn't a tax efficient account, it's just a general investment account. So what I'm going to do is at some point I will sell that position and put the money back into here, because it makes more sense to have it tax protected. But the reason I haven't done that yet is just because when I purchased Palantir, it was a lot more expensive than it currently is. So I'm at a loss on that account right now. I'm going to wait till it goes up slightly and then I'll sell out of it and move it on here. But anyway, having said that, I'm going to purchase more on this account today, and I'm going to put 500 in. 500 is going to get me 77 shares, and let's just review that order. There you go, I'm going to get £499.25 worth. We can send that off. Don't get me wrong, I understand that this is a riskier move to a lot of people, but I'm okay with that. I've calculated my risk versus reward, and I'm happy to have this stock in my portfolio. I'm sure a lot of you know what the next investment I'm about to make is. It's a company that I'm a fan of. It's a company that I have wanted inside of an ISA for a long time. And that is, of course, Tesla. You either love it or you hate it. This company, along with all of my companies in my portfolio that you've seen today, are ones that I plan to add to over time. I'm going to make a pretty big investment into Tesla today, but it's not going to stop there. I'm going to keep adding to it, and I'm going to keep adding to other positions as well. So let's purchase some Tesla. This is a move I've wanted to make for so long. I just haven't got round to doing it because it didn't make sense to do so outside of an ISA. And I'm quite annoyed that my ISA transfer didn't happen when it was dropping here, when it was at these prices, because that would have been very nice. But, you know, life is life and it didn't happen that way. So I'm just going to pick up some today. And although this was a real opportunity, this dip here, if you're a long-term investor and it's a stock that you believe in, the small price difference doesn't really matter. If you see opportunity, then yes, act on it. But if it doesn't drop and you still want it, then of course I still think that's a good option. So let's buy some of this. I'm going to put 2,100 into Tesla today, which is going to get me just under 14.2 shares. And like with Palantir, I also have Tesla on my general investment account on free trade, and I have 2.65 shares on there. So I will move that over at some point as well. So this is, I don't think I've ever invested this much in one go before, so this is quite nerve-wracking. Let me review this thoroughly. Okay, so the FX fee is going to be slightly more because of the larger amount I put in, but still, all in all, it's not too bad for such a big amount at one time. I can't believe I'm dropping £2,100 this easily, but let's just do it. It's done. It's done. That was very scary. So now we can see inside of my portfolio, I have these investments. They are all pending at the moment, hence the clock. None of them have gone through until we actually get to Monday. And I just want to say a few more things before rounding this video off. I'm also going to create a pie, so stay tuned for that, and you can follow my pie if you want to as well. I just want to say there are also other companies that I want inside my portfolio that I haven't purchased today. So I just want to run through some of them with you. I really want to add BA Systems back into my portfolio like I had before, and also Rio Tinto. And there are a couple of other UK dividend stocks as well, but I'm not adding them today because of a few different reasons. Rio Tinto is a very volatile stock, being a mining stock, so I'm just keeping my eye on that and just watching it for a while. And also BA Systems has had such a surge recently. I just feel like it's a tiny bit overvalued right now, so I'm going to wait for that to drop before picking up some more shares of that. But they are two that are going to be added to this portfolio soon. On top of that, I want exposure to some new sectors. I want a specific AI stock in this portfolio. I think that's the future, so I do want exposure to that. I'm thinking maybe Nvidia or AMD. I don't know, maybe even a different stock that I haven't considered yet too much. I'm still looking into that. On top of that, I really want exposure to a genomics stock. I've spoken about this before, but it comes down to how I think this is going to be the future of medicine, the cost demand curve, and all of those theories that I've spoken about before. So I definitely want exposure to that. However, right now, I'm not really sure what stock that would be. So perhaps I'll end up going with an ETF, perhaps I'll end up finding a stock that I really believe in. I'm not going to invest for the sake of it, but them two sectors are definitely on my mind. And as well, I'm considering a lithium-based company because of the whole EV movement and them using lithium in their batteries. I may get exposure to that, but I'm not too sure. And lastly, VUSA. I'm a massive fan of VUSA, and I've always had VUSA in my portfolio. And I believe I'm going to add it back into this portfolio. I just haven't done so yet. At the moment, I still have exposure to this because I have my Vanguard ISA where I have FTSE Global All Cap and the S&P 500 tracker VUSA. So I still have it. Don't worry, I haven't got rid of it. It's still there. I just don't have it currently in this portfolio, but I do think I'll add it back in very soon. So there you have it. Those are the first steps I'm taking to building this new portfolio. I'm super excited about this. And like I said, I'm going to be investing way more frequently now, so you can expect to see these positions being added to and new positions joining these ones very soon. If you want to see the moves I'm making inside of my portfolio way before I film a video and put it on YouTube, then consider becoming a patron. I'll leave a link to that in the description below. It costs less than buying a coffee every single month, and you'll have access to the Discord where we have a great bunch of people talking about different stocks and different investment strategies and all things personal finance as well every single day. So I hope to see some of you guys over there soon. I hope you enjoyed this video, and I'll see you very shortly in the next one.